What if I told you that the system you trust to protect your money doesn't actually want you financially free? What if the goal was never for you to save, grow, and walk away independent, but to stay just comfortable enough to keep paying every single month? Banks don't advertise this, of course. They show smiling families, shiny cards, and the promise of financial security. But behind the scenes, the real engine of their wealth isn't your savings account, it's your debt. And once you see how this game works, you'll never look at money the same way again. From the moment you open your first bank account, debt is quietly positioned as normal, even necessary. Credit cards are framed as convenience, loans as opportunity, and long-term payments as the responsible way to live. Society tells you that owing money is part of adulthood, that a monthly installment is just how life works. Meanwhile, banks grow richer year after year, not because people are winning financially, but because they're locked into systems that reward borrowing over ownership. This video isn't about hating banks or pushing fear. It's about understanding incentives. Because when you understand why banks want you in debt, you begin to understand why financial freedom feels so rare and how awareness is the first step toward breaking the cycle. Debt is not a side effect of the banking system, it's the product. Banks do not grow wealthy by holding your money safely in a savings account. They grow wealthy by lending it back to you with interest attached. Every loan you take becomes a long-term revenue stream for them. When you borrow money, you are not just repaying what you took, you are paying for time, and time is where banks win. Interest quietly multiplies, turning small loans into massive payouts over years or decades. A person who saves $10,000 earns almost nothing for the bank, but a person who borrows $10,000 can end up paying double or more. This is why debt is encouraged at every stage of life. Student loans, car loans, personal loans, credit cards, each one is designed to keep money flowing upward. The system rewards those who borrow consistently, not those who finish early. The longer you remain in debt, the more profitable you become. This isn't personal or emotional, it's mathematical. Banks don't need you to fail completely. They need you to stay just solvent enough to keep paying. That balance where you're stressed but surviving is the most profitable position of all. Monthly payments are the heartbeat of the banking system. Predictability is everything. When millions of people make payments every month, banks can forecast profits with extreme accuracy. Your obligation becomes their stability. This is why minimum payments exist. They are not designed to help you escape debt. They are designed to keep you inside it. Minimum payments reduce the pressure you feel while barely touching the principal amount. You feel relief, but the balance remains. Miss a payment and the system doesn't collapse, it becomes even more profitable. Late fees, penalty interest rates, and compounding charges turn mistakes into income. Banks build entire models around human behavior, knowing that stress, emergencies, and impulse will eventually cause slips. These systems are not accidents. They are carefully engineered structures that convert everyday life into predictable cash flow. From the bank's perspective, the perfect customer is not someone who pays everything off quickly, but someone who pays slowly, consistently, and for as long as possible. Debt doesn't just exist, it is marketed. From a young age, people are taught that borrowing is responsible. Advertisements celebrate credit as freedom, loans as progress, and mortgage as success. Rarely is debt shown as a long-term burden. Instead, it's framed as a smart move, a necessary step, or even a reward. By now, pay later sounds harmless, even empowering. But the language is carefully chosen to hide the cost of time and interest. Ownership is delayed while consumption is accelerated. Society praises the appearance of success more than the reality of independence. A financed lifestyle looks impressive on the outside, even if it's fragile underneath. Over time, this messaging rewires expectations. Living without debt begins to feel unrealistic, even irresponsible. Banks don't need to force people into borrowing. They just need to normalize it. Once debt becomes routine, people stop questioning it. And when people stop questioning, systems continue unchallenged. Debt is also a powerful tool of control, not through force, but through limitation. When you owe money, your choices shrink. You are less likely to leave a job you hate, less likely to take risks, less likely to challenge the status quo. Stability becomes survival, not growth. This dependency benefits institutions that rely on predictability. A workforce burdened by debt is compliant, cautious, and consistent. Financial pressure narrows vision. People focus on the next payment instead of the next opportunity. Long-term dreams are postponed for short-term obligations. Banks don't need to dictate your actions. Debt, does that work for them? When income is already spoken for, freedom becomes theoretical. This is why true financial independence feels so rare. It requires stepping outside a system designed to keep you inside it. The final trap of debt is psychological. It doesn't overwhelm all at once, it arrives in pieces small enough to ignore. A manageable payment here, a small balance there. Over time, those pieces stack up. Interest compounds silently while emotions take over decision-making. Instant gratification feels good now. The cost is distant and abstract. This delay tricks the brain into underestimating the damage. Debt also creates shame, which keeps people quiet. Silence protects the system. The moment you understand this pattern, the illusion begins to break. Debt loses its mystery when you see it clearly. Awareness doesn't erase obligations overnight, but it changes how you move forward. And once you understand how the game is played, you finally get the chance to stop playing it on someone else's terms. Banks are not villains in a movie, and debt is not an accident of modern life. This system exists because it works exactly as it was designed to work. It rewards borrowing, patience on their side, and time spent paying on yours. The danger isn't debt itself, it's ignorance. When people don't understand how money truly moves, they follow rules that were never written for their freedom. Every interest payment, every minimum balance, every delayed payoff quietly transfers control away from you. But the moment you see the pattern, something shifts. You stop accepting financial struggle as normal, you begin asking better questions. And with awareness comes choice. Choice to borrow carefully. Choice to prioritize ownership over appearance. Choice to reduce what you owe so you can increase what you control. Because real wealth isn't about what you can buy today, it's about how little power others have over your tomorrow. The less you owe, the more freedom you own.